Boom, and here we are. I have myself, and Love is here. Love is here. And the great thing about today is we're starting a new challenge for our Discord. And the reason I invited Love, after I quickly talk about what I'm expecting today, we're going to talk about what potential positions we can enter into because we want to have people on the side. So if you're watching on the side, please add a stock or two that you think might make sense to trade for the small account. So here's the catch for the small account. We're starting with $1,000 in about 50 days. By September 1st, we're looking to have $25,000. What that attributes to is we can make 7% a day. And as long as we do that each and every day, we would be at 29,000. Or we could also trade one trade, go out 2 weeks, wait for 100%, and then call that a successful trade. Make 5 successful trades in a row, and we'll be at 32,000. So you have to figure out multiple ways to attack this challenge. With that said, I'm going to go over my ranges real quick, and then I'm going to bring on Love, and we'll talk. So please, if you have comments or questions on the side, you want to bring up a certain stock, we're looking for a stock that has high volume. So you don't want to see 15 contracts open, 20 contracts. You want to see 500, 600. So when you're buying one, two, three contracts, you can charge your own price. You don't have to say, okay, well, I have to sell the bid because nobody wants this contract. So here's my cheat sheet real quick. SPY previous levels. Hopefully everybody can see this or zoom in. Friday, 369, 362, a 7-point range. So I highlighted in blue where we are right now, 371. A nice 7-point range would be 366 to 374. That's my prediction for today. Same with the QQQ. We had a 7-point range on Friday. We're sitting around 278 right now. So a 7-point range would be 281 on the top, 274 on the bottom. And that's about it. Let's just get rid of that. All right, let's get rid of this too. All right, everything's done. All right, perfect. So thank you, Love, for joining me. Love, do you know which way the market's going today?
No, absolutely. We've had OPEX last week. We had a 3-day weekend. Now we've got Powell testifying twice this week. And futures are super green right now. So do I know? No. If I had to guess, I'm thinking today green, maybe next or Tuesday or Wednesday red. And then after that, I'm not really sure because I think that we're in for kind of a squeeze on the like a
Mm-hmm.
really good bear market rally. So right now, no, I don't have a clue. I mean, but
Okay.
those are just my
No,
guesses.
no. And I personally agree with you. What I said on Friday is we could see short covering. We had an ultra green day. Now, here's the catch. The market in this year has lost like $9.3 trillion. When we had the last bear market in 2020 of March, the market lost 8.3 trillion. So we've lost more this year than we did going into the pandemic where everybody was super worried that things were falling apart. So have we hit the bottom? Perhaps, but we're looking to day trade. So we're looking for stocks that have demand. Now, I mentioned a stock on Friday, NEO, that seems to have demand over and over. And I see a person mentioning here. So I see somebody else mentioning Archer Daniels and fertilizer. Understand, everybody, we're looking for the best in class, meaning we're looking for like the most actively traded options. So if you're looking at an Archer or Daniels or Seed and Fertilizer, which might be even Seed, the company, which is an agricultural company, or Apps, which is Harvest, again, there's not enough volume of options traded to make those decent trades for something that we're looking for.
Yeah.
Um,
So for that person, like absolutely, Archer Daniels, you could look at for your normal account. But when you're looking for a small account trade, you can have different strategies for it, but you can kill your account by going into like low volume options. You can kill it. Like whereas a bigger account can weather the storm, a small account can really die that way. So you definitely want to, even if you don't go best in class, still need to be, even for somebody like me that's really risky, you still need to be cautious. That makes sense. And I'll tell you what I mean after. I don't know if Matt has something he wants to say, but for me, for instance, I love trading MSTR, which would be too big for my small account. But if I think that Bitcoin's going to die in the next month or two, I would go for BITO because I can afford that on my small account, right? I can't afford best in class, but I can still trade that trend. by getting something that's got a higher volume than like way out of something you've never heard of, but still not the same one that actually would have traded. Like for instance, maybe you can't trade Tesla, but you'd rather trade NEO. You can do that, right? But you're still kind of in that best in class category. So ADM for a small account, I wouldn't touch it, me personally. Um, but you can look at the trend for your regular account. Like there's nothing wrong with that.
Okay, and Love makes a very solid point. So hopefully everybody recognizes that. Tesla and Neo and Lucid and Rivian, they'll all likely trade together. So they'll all follow Tesla's lead and Tesla will follow the market. So, I mean, I know I threw my sheet. Let me just rip it back over here. But the premise for today is, let me just get out. Here we go. I will be looking at the SPY. And when I see the SPY break a level, because I'm just holding on the sidelines, if the SPY breaks 366 going down, that means the market has turned bearish. If the SPY were at 371, breaks 370 going down, doesn't matter. We can always find support someplace in between. So the point is, the greatest thing about my first trade for this small account, it's going to be a winning trade. I've got no FOMO to get into it. In fact, I'm just going to sit back with my bigger account this morning, possibly make a trade or two, possibly send an alert out to Discord. But as far as my smaller account, the last thing I want to do is be risky. My first trade, I'm going to be so golden on it that it's not, I'm going to be like, okay, well, I'm waiting for the bottom. Oh, we bottomed. It's only 10:15. I'm going to revert back to my timetable and say, if things are bad at 10:15, they'll probably get worse around 11:15. And because I'm using Robinhood for my account, I'm saying, okay, I only have 3 day trades and I don't want to use them up because they're like gold. So my first trade will probably be a trade that I'll enter in like at 3 o'clock or 3:30 and go over till tomorrow. All right. That way I don't have to use a day trade. That way I'm not looking for instant gratification. That way I'm letting the market tell me, yes, it's going to be bought today or it's going to be sold at the top today. And if they sell the market at the top today, I say, okay, well, they'll likely sell until tomorrow. If they buy the market and we see a nice, sell off and a rebound in their support, I can say to myself, going into Tuesday, they'll likely be the same support. So maybe I get a pop on futures and that way I hold my position overnight and I might claim 30 or 40% like that. As far as what I'm looking to do with my money, I have $1,000. My first position is going to be about $130, maybe $150. If I'm incorrect, let's say it goes down 30% and I paid $150 for it and it's going to go down 30%. My next buy will be like at $104, $105. I'll buy 1 or 2 more contracts. So now if I'm in for 130 and let's say I'm in at 104 and then my third purchase is at $1, I'm going to be in for $334, about a third of my small account. I'm going to have 3 contracts at an average price of about 110, 111, I guess. Point is, if I'm correct, and let's say I get out at like 150 and I'm in at 111, that will be a 39% gain with a third of my account, which will profit maybe about $130 in a safe play. So I have all these different scenarios, never safe.
But no, I'm not safe. I'm just saying that's my
strategy. Okay, so I'll let you talk in 1 second. The greatest thing about Love is she says she's not safe, but what she is convicted. So when she buys an option, whether it's long the market or short the market, and it goes against her for 2 days, she says, I'm going to be right. It's not that she's risky. She says, I'm going to be right. I just picked the wrong time. And she'll average down correctly, whether it's 1, 2, or 3 more contracts. And when she's correct on the 4th day, 3rd day, 5th day, maybe next week on Monday, she's correct. Maybe take a whole 5 days. The point is, she's going to crush it. So it's not that she's risky. She just believes in her convictions. If she comes up with a strategy rather than exiting out, is that a good way to phrase it, you think?
So I actually spend a little more time on the front end before I enter a trade, right? And so when Matt's talking about my conviction, it's usually my analysis going in the front end, right? Somebody's talking about pre-market levels. If I'm day trading, pre-market levels are going to impact the way that I trade. Absolutely. Typically, I swing trade, so I'll keep things. So I'll stay in a play. Let's, for instance, the market doesn't go the way that I think it's going to go today, but I'm already in a trade. I'm actually not going to touch it if I have a small account. I don't buy more. I give myself time to be right. And the way that I do that is that I typically look at pre-market levels. I look at the trend for the past so many days, right? And I'm able to buy slightly out of the money or out of the money, but I give myself a month or plus time, right? So that's me being risky in the sense that I am buying out of the money, but I give myself time so I don't have to average it out. I don't have to throw more money into a trade, even if it goes, like, let's say, for instance, I'm in a trade and it's down 17%, right? What I'll probably do is wait, because I absolutely believe that within the next couple of days, it'll be green. So I don't even do anything with it because my analysis happens on the front end, not the back end. So when I say that, typically, like I explained to you guys in Discord, right? This is my trading style. I'm not going to change it for a small account challenge. The only thing I'm going to do is be more transparent as to what I am going to do. So looking at pre-market, it's likely that I think that I might go with the trend that I think I see, which is green today, possibly red or tomorrow or Wednesday, and not knowing after Thursday. So I'm looking for maybe a put on the SPY and a put on BITO, right? If that's the case, BITO, I'm probably going to buy Leap. I'm probably going to give
Let's go
myself.
back to the SPY. Can we go back to the SPY real
Well,
quick?
I'm going back to the SPY. Just
Okay, because you
after
said maybe green
Biden.
today and green tomorrow, and I'm thinking, and you said you're not going to fight the trends, and I'm thinking, okay, she's going to say something positive about the market, and yet you flip the switch on me.
Oh yeah,
You
I'm
said,
getting to the
yeah,
SPY.
no, so please, because
No.
you just blew my mind, and if my mind's blown, like 3 people just died that are watching us.
Hold on. So I'll probably buy a Leap on BITO, and then I'm probably gonna buy a put for the SPY that expires tomorrow. Right? I'm not giving myself time on that one because I'm gonna buy a slightly closer to in the money, and typically it might be a scalp or a day trade, right? And so when I buy on my Smile account, I usually go half and half. Half kind of risky, but still based on my analysis, and the other one really safe, right? So typically the safer ones are going to be a month plus out, right? But with the SPY, I do believe that it could go back down to 370 within today, actually.
Okay.
So instead of buying a zero DTE or time to expiry, I will buy for tomorrow because we have extra expiry days for the small way. So if I trade today, because I don't believe that you have to trade every day on a small account, like I said, I'll buy a month out or I'll buy like a Leap or something.
Mm-hmm.
That way I'm not stressing about it. And if it goes down, I don't feel like I have to average down. And again, my profile is different just because I'm not much of a scalper or a day trader. I tend to keep options overnight. But for me, Matt has a Robinhood account. I actually have Webull, so mine is a cash account.
Mm-hmm.
That I typically don't trade on a cash account. You guys know that.
Mm-hmm.
But for this one, I am. So if the market turns extremely ugly by the end of the day, I will probably sell that SPY call and keep the BITO.
Right.
If I do that.
And again, the BITO means that you think Bitcoin and some other cryptos are going down.
Within the next year, yes.
Right. Okay, excellent. I'm just going to show a chart real quick. I was going to bring it up, but it's a different chart. So I'm just going to show everybody, just look at the bottom of this. This is NEO. Okay, so we're at 2077. Now what you can see on the right side, which would be right around, where's my finger? Other side. There we go. You can see buying in, what is that? 8 out of the last 10 days. And the volume significantly picked up on NEO. And we know that already because anybody that's followed NEO knows that it has somewhat strong support all the way to 2250. And the fact that it's 2180 pre-market means it'll probably get another pop. So it's already up 5%. It'll probably be up 8% on the day. So the trade I am looking for, because I mentioned NEO, is I'm looking for potentially NEO to dip at open. If it dips at open, I'll consider buying a call and going out to next Friday. If I want to wait and show patience, which I probably will, because I talk about not trading before 10:30, because it's safer for me. It gives me market direction. And sometimes when I call the bottom, things get a little worse at 11 and I'm already 30% down. So instead of buying my first position at 1054, I've bought my second position, my third position. And the last thing I want to do when showing people how to properly grow an account is say, okay, it's 11 a.m. My $1,000 is all in on NEO calls. And then it goes against me. And then I'm waiting till Thursday, Friday. And eventually I'm right because my strategies are generally right or correct. But it would be a terrible way to start, especially when you can get a better deal. So if I were all in and I had 5 contracts, by Thursday's time, if I was down 30%, I could have had 30% more contracts. So I'd probably be at like 7 or 8 contracts. And that way, when I'm correct at the end, instead of making 20%, I'll make 80% because I'll have more contracts worth more money. So hopefully people get that. Please buy one contract to start, whatever the position is. We mentioned NEO. So I'm just going to, somebody else is bringing up DraftKings. So let me just take a look. So what I'll first do is I'll pull up DraftKings here. Let's see where it is. DraftKings. Okay. And then I will look at the options. Okay. I'm not even looking at the stock price to see where DraftKings is. Does it have support or demand? No demand. What I'm doing is I'm going to the open options and I'm going right around the strike price. And I'm looking at puts. And now I see to the downside, there's 10,000 contracts open for DraftKings to drop about 20% this week. And I say, okay, let me see what's on the call side. And this is just very simple analysis. I'm looking at the call side positive all the way up to a bump of 30%. There might be 10,000 contracts, if that. So DraftKings to me looks a little dead on the board. That is not where I would look for my small account trade. But if DraftKings were to tell me if people are more bullish or bearish, I would say they're definitely more bearish and they think $10 range could be there. So here's just what I want to show everybody, because we have 2 predicaments or 2 predictions about the market. So Friday was bullish. We came down here. Let me just draw it out first. We could be bullish and then we can go even more bullish. So there's a chance the charts look like this. Okay, here was Friday. Boom, Friday was bullish. We dip a little at open and we're bullish today. Now that's one scenario. The other scenario, which we've seen multiple times, is same. It looks the same. And then we get into today's day of trading and we go down to a lower level than we were. I used to have another one of these boards where I left it for like months because it looks like it's recovering. It looks like Carnival's being bought. It looks like Ford's being bought. It looks like Wynn Casino is being bought. And understand, in Macau, they just shut down a full hotel of 700 people because of COVID. And Macau is also upping their tax rate on casinos to 40%. And they're doing a whole lot of restrictions on these casinos. So you have a play like that that should be sold off. Also, airlines this weekend, if anybody watched the news, there were thousands of flights canceled. The most flights canceled in a single weekend dating back to pre-pandemic levels. And not only canceled, there were most delays. So if you think airlines are being bought up, and I saw they were up 3% pre-market like an hour ago, I would be looking for the top of the market today, the same way Love mentioned a SPY put perhaps expiring tomorrow. I would be saying, show me the top of the market for Carnival today. Show me the top of the market for Delta, because Delta had the most flights canceled, okay? So when it comes between Delta, American Airlines, United, today, if I was going to be bearish, I'd be looking at Delta in a negative way. So that, besides for NEO would be positive for me. Delta would be negative for me. You can take 2 mixed positions. I might buy 1 contract of each, and whichever one runs, I might hold. And the other one, when I see the bottom, if I'm wrong, I might buy 1 or 2 other contracts. So again, your mind has to think in multiple directions, but that's what I'm looking at right now. I see somebody mentioning Shop. Shop is not good for a small account. It's too expensive. One option probably costs more than an entire small account. So I will get to Apple in a minute. For both, Love, what's your specific strategy to start the challenge? It's a good question.
So I personally will not likely buy more than 1 contract. Like I said, I'm usually going to give myself time to be right. I don't want to buy myself out, because if I'm wrong, then I'll blow up my account. So I'm typically only going to buy 1 unless they're super treat contracts. and I'm always going to stick to stocks I know. I'm typically going to try to buy myself time unless so 50% risky, 50% not. I'll buy myself time unless I see a good trend, and I'll likely be a tad bit more risky. Sticking to contracts I know. If I buy myself time, I'm going to go out of the money slightly, but I'll look at the past trends to see where my top and bottom is for my out of the money options. If I'm being riskier, like even with the SPY, I'm going to buy closer to in or at the money, and I'm going to take profit sooner, right? So I'll give myself time on the ones that I bought time on, right? If it goes down, I'm not going to panic. I'm like with the QQQ puts that I bought, it took maybe about a week or two, but those were super in the money, right? After recognizing that trend. Did I panic and buy more? No. I just said, leave it alone. So that's typically going to be my strategy. I'm still risky. Like I am probably going to buy a put for the SPY tomorrow. I'm probably going to buy a BTO call or put leap, which it will only cost me like $100 or so. So that's typically my strategy. The same strategy I keep every day when I trade. I'm going to use for this.
Okay, cool. I'm going to give my strategy in 1 second, but I see Thomasina has a question. She says, I know this is random. I don't understand how a put work, how to do a put. All right. So yeah, how do you buy a put? So it's the same way. You buy a call because you think a stock is going up. DraftKings is $12. You think it's going to 15. You buy a $12 call. When it goes up to 15, you make a couple 100%. The same is true for a put. No emotions. You're not tied to the market. You just say, I think it's going down. DraftKings is $12. You buy a $12 put. You're paying whatever the cost is, $100. When DraftKings goes to $10, and you're right, Thomasina, you say to yourself, okay, my $100 put is now worth $300. It's the same as buying stock, except it's like leveraging it. It's what's the word I'm looking for? Don't know the word I'm looking for. But my strategy for today, let's get to my strategy for today. Okay? I'm going to look at 10-15 at 2 or 3 different stocks, NEO, and I'm going to look at Delta. I'm going to look to see if they have inflow or outflow, okay? If I see outflow on Delta, I'm going to wait for a spike later in the day. And I'm going to say because they're selling Delta in the morning when the most activity of the trading happens. However, if I miss my entry because I won't chase and I'm looking for the best entry, I'm going to look for the top on Delta. Same, if I think they're going to buy up the market today and I see inflow on NIA, Lucid, Lee, Xpeng, Tesla, or including Apple because it's a tech-related stock, I will say, okay, find the bottom of NEO. If that's 11 a.m., great. Get me one call contract expiring next week or whatever, because if I can get into NEO and I know it's $21.80 to start the day, let's say, but I can get in at $21 where it's only up 1.5%. And I say, okay, I think it's going to go up to $23 before it rejects later in this week. Then that is my strategy. In at 21 and change. As soon as it gets close to 23, I already have my ask set to sell my contract and secure profit. Now, if I'm in at 21 and it goes down because today turns out to be an outflow day, I'm not going to buy until the end of the day. If your stocks are telling you it's going to be an outflow day, whatever it is, Apple or IBM, Intel, whatever stocks you're in, Lucid, Plug, and it's telling you that it's going to be an outflow day, understand things are going to get worse. Whatever stock you're in, if it's an outflow day. Likewise, if it's a bullish day in the market and we see something like Friday and there's demand and there's short covering, meaning people have shorted stocks, they made enough money, they're like, I'm going to buy it back and I'll wait. If there's short covering, then you don't want to buy it right away because they'll push the stock higher and it'll go higher. And towards the end of the day, it could be at its highest. So if you're looking to buy a put, like Love mentioned she'd buy a put, Love's probably looking for the SPY to spike, something ridiculous. And that's when she would get into her put or her negative position or her bearish position. So that's my strategy today. Someone's looking at Bank of America today all week pretty much. So I'm going to look at that stock real quick and let's just see what Bank of America looks like.
1 second. Thomasina, I posted something in our Discord chat for you in terms of understanding the option basics. I use Investopedia a lot. It's like Google for stock trading, right? So feel free to explore that and kind of ask those type of questions, because then you can understand, like, you may not understand, like, it took a minute for me to understand options as well. So I understand what you're going through. Sorry, Matt, I just wanted to let her know.
No, that's perfect. That's perfect. I appreciate that. I was just looking at Bank of America. I'm looking at the open interest on both the call side and the put side. And in and at the money, it's basically even. But when you go a little over the money or out of the money, the stock or the open options are definitely more bullish on that right now. So again, that would be something that I have to wait and see. I'm not that familiar with the banking stocks right now, but again, I'm looking at the chart. And yes, if the market's bottomed, that stock has a chance to go up about 10% in the next week. But all these stocks do. Understand.
But I think he's been watching Bank of America for a while. I think he's been watching that for like at least a month or so.
Yeah.
So I feel like he's got a pretty good beat on it. That actually, because you've been watching it, because you understood the flow, that might be a good trade for you, more so than anybody else, because you know that stock, right? I don't personally know it, but I know that you've been watching it for a while.
Right. But that stock is also moving along with the market, which had major outflow days towards the end of last week. And then you had some inflow days, and then you had some short covering on Friday. So again, you have to look at the bigger.
Are you opposed to meme stocks for your small account? Because I see Cool Chick is asking about AMC.
No, I think meme stocks are great on your small account, actually.
I do too, actually. Especially if it's something that you know, or you can find the trend really well. I keep GameStop and AMC on my watch list just because I like the right opportunity to play it. And when you can, go for it. Absolutely. But again, you guys have to understand that we're kind of yin and yang here. Matt's got a very safer approach to which is weird, right? We're saying this. Matt has a very safer approach to doing this particular challenge. I, on the other hand, I carry a lot of risk when I trade, and I let people know that I'm not afraid to see a trade be red and be okay with it, especially because I know when to cut it versus when to hold it.
Mm-hmm.
And that's basically by recognizing if the trend has literally changed or if this is just a temporary thing. If the trend's changed, you cut. If it has not changed, you've looked at the chart and you're like, no, I'm right, I'm just early. You have a choice. I think Matt would average down. Me personally, I would just let it go. Yeah. I would keep it the way it is and say, I got in at that price, not because I thought it was a bad price, because I thought it was a good price for me and I'm comfortable with it. If you're not comfortable with the current price, bid underneath it. Bid where you are comfortable. You're like, hey, it's $300, but I only want to spend $150 on it. Put in that bid and leave it. Don't touch it, because that's where you were comfortable at. Don't move it.
Yeah, right? Exactly. And sometimes when I put in a bid, I like to look at where it was the other day. So I look at the bottom, and if someone was like, okay, $1.60 was the low on Friday, and now it's traded for $2.20, I say to myself, $1.60 sounds good to me because I know it has limited downside. So I might put in for $1.60. Now
people say that when you're like, how do you know what out of the money options to go for? You look at the previous highs and lows for the previous days within a week. If it hasn't reached that, whatever the high and low, whatever the out of the money call or put I'm looking at, then that's too out of the money for me because it's not reasonable. Unless I'm trying to scalp it or day trade it, I'm not buying that far out of the money. So that's how you choose what out of the money puts or options you buy.
Yeah, so somebody asked, so I did say I would summarize what stocks I'm looking at. So one of the stocks I'd be looking at is Redbox. Why? Because it's a meme stock that has significant movement, and if you follow unusual options activity, before Redbox went from like $8 to $13, they were buying calls. Then going into, I believe it was either Thursday or Friday, they bought $6 million worth of puts. And this stock opened at $12.60 and went down to $9.60. So I have a video on unusual options activity, and we have this on our Discord channel as well. And then you can also search by this ticker, looking at the flows and stats. So I will look to see a position here. AMC, again, I used to love to trade this because in a decent market where the market's not getting thrown up on every day, AMC has demand. and it follows the Dow stocks. So I would look at AMC. I would also look at shorting Delta because of all their issues they had this weekend. I know ticket pricing's up, and if I was to look positive, it'd probably be NEO. If I say we're going to have a positive Tuesday and green Wednesday, then I might get into NEO and ride NEO up 10%, which might be like 50 or 60% on a trade. What do you think about AMD, love?
AMD, I love to trade AMD. Absolutely love it. It's cheap. It's cheaper than NVIDIA. It moves well. Right now, I think it's in a bullish trend. I've looked at the algos for AMD for last week, so I won't be buying puts on it, but I would let it ride up and then eventually get some. Or if the trend, like NVIDIA is definitely in a bullish trend, I would buy calls on NVIDIA if my small account could afford it. I can't afford it right now. So I would put it on your watch list for when the small account grows, because I would absolutely be playing that one.
Yeah. I mean, again, today it's going to be mostly about market direction. So we've seen the market throw up on itself. So finally, we had a rebound on Friday. The question is, does it continue? If it continues today, does it continue tomorrow? Understanding that it would not make sense for the market to be green on Friday, continue to Tuesday, possibly Wednesday, and then just finish out the week, keep going up each level. So I understand Love's way of thinking. She's saying, okay, well, if it goes up today, it's going down tomorrow. If it goes up today and tomorrow, it's going down the next day. And that makes sense because I get it. We could be having a rally, but it needs to be proven to me. If not, I'm still going to be a bear. I'm still going to look for the tops, and I'm still going to be playing puts, I think.
So if I could say one more thing is that some people are very good at playing the trend both ways. They make a lot of money. They can get in and out. If that is you, do that, right? Stick with what you're good at. Me personally, I'm not quick enough for that. So I have to choose a side, right? If I'm going to be a bear, if I'm going to be bullish, right? Sometimes the market will tell me which way to go. And if that's the case, I pick a side, then I'm waiting. I'm absolutely waiting to get in. I'm waiting to I can see the trend about to change from the top to the bottom, then I'm going to buy my puts. Or I'm waiting at the bottom to see if I can see if they confirm the trend's changing to going up. Then I buy my calls, right? I pick a side and I wait, right? I don't try to play both sides because I'm not good at it. If I was good at it, I would absolutely do it. I'm still learning that. So no matter what the market is doing, if you do your analysis and you're saying, I see this, then you wait for the right time to get in to read your analysis.
Yeah, and I agree with you there as well. Like, I personally can't play both sides, and when I do play both sides, I get so nervous about both positions because I'm telling myself the market's going up, and then I tell myself the market's going down, and I confuse myself. So that's just me personally. But somebody asked about QQQ. So here was my cheat sheet. I think we're sitting about 278 right now. Again, the QQQ, its range is every 3 points. So if you see we're going to start out bullish today and we hit 281, you really want to see if we break 281 to the upside. 281 to the upside would be 283, 284 next, where I would expect it to reject. Because I look at the psychology again, and nothing's told me that we've gone to not having a recession, to no longer having fears about crypto tanking and dropping another 50%. There are still so many fears out there. Oil going up. We're going to get bad earnings reports coming out. So until that changes, again, if the market goes up and they want to give me a high, I'm going to be looking at puts on the high, whatever it is. And because Friday was green or it ended green and Hang Seng, Hong Kong, China was green, I'm not going to get counter. If I was going to invest at 9:30 a.m. or 9:34 right now, I would say, yes, I'm a bull today. But because my overall position is somewhat bearish, I'm going to say, find the top. I'm going to say, show patience. And I don't care if it happens at 2:30 p.m. where I finally make a trade, or 2:30 comes around and I announce to my Discord and I say, I'm not trading today because I was incorrect about what I thought would happen from 12 o'clock to 3 o'clock. And the market is weak already, and I'm not chasing it to the downside, nor do I want to play a rebound because things can get worse tomorrow. So there are times, even if you're showing such good patience and you're not having FOMO and you have all this, and it says account balance, you have so much money to use on the side, there are times I'll just say to myself, I'm here to make winning trades. I'm not here to be actively trading. I'm not here to say, okay, I got to make a trade today or else I'll lose it. Shit, I'm here to make money today. The last thing I want to do today for the small account is start an account with $1,000. And at the end of today, say, I have $749 left, because all in all, you would say you're down 25%. Whereas if I didn't trade and I start tomorrow and I look for a similar position, all of a sudden, instead of being down 25%, I can actually buy 30% more contracts. So if I was going to go all in tomorrow and buy 10 contracts, but I waited and I didn't go today, I could buy 13 tomorrow. And then if I was correct about it, rather than getting $2,000, I'll get $2,600. So it matters. Everything matters. That's how I'd like to leave it. Love, any lasting words you'd like to leave people with?
I'd say stick with the strategy that works for you. No matter what we do, right? You don't need to copy, right? You can find one that works for you. You don't want to sit there and have to wait for somebody to tell you when to buy or sell or what stocks to look at. You can look at the ones that we're looking at. You can look at the ones that you like, but the strategy is to win, right? And so we don't want you getting into something that's way over your head or you're not comfortable with. Ask questions and people will be there for you.
Okay, awesome. Listen, so again, tomorrow morning, I'm going to be doing a live stream at 8:30 a.m. because I'm going to take my kids to school. If you're thinking about joining the family, we've got NFTs for sale. If you buy an NFT, right, as long as you're the holder of the NFT, you have the smart contract tied to it, and you can become a member of our Discord. Again, follow the ranges. So tomorrow morning, I'm going to recap whatever trade I entered into today, and I'm going to talk about what trade I'm looking at tomorrow. With that said, see you later. Thank you so much, love.
Bye.
Bye, everybody.